Good morning and welcome to the Australian Stock Reports online morning update for the 19th of August 2011. Panic over Europe's debt crisis and the US economy roiled global markets overnight, with the major indices plunging more than 3% in a rerun of last week's volatility. A huge contraction in Philadelphia area manufacturing activity helped fuel the carnage on Wall Street, which was already reeling from reports European central banks were getting caught up in the region's fiscal crisis. Financial companies on both sides of the Atlantic suffered major losses amid fears Europe's debt contagion will lead to another credit crisis and trigger another round of asset write-downs. None of the other major risk asset classes were spared from the rout, with traders and investors losing faith in the ability of policymakers to prevent another global recession. The Aussie market is likely to get swept up in another sell-off today, with SPI futures currently pointing to a 110-point drop on the open. As mentioned, there was major damage on all of the key stock indices overnight, with the S&P 500 having now plummeted 17% from its high point on April 29. Oil crashed almost 6% amid fears a global recession will sap demand for energy, while safe haven buying propelled gold to another record high. The Aussie dollar fell below $1.04 and is continuing to slide lower this morning, with traders offloading the currency amid concerns over the global economic outlook. The SPI accelerated declines yesterday evening, reaching all the way down to 4,100 in line with a hammering on European markets. However, the index failed to extend its losses past this level, which supported the price action for the remainder of the session.
Get free access to our daily reports and recommendations now. Visit australianstockreport.com.au/try.